Okay.
Go.
All right. Good evening, everyone. Thank you to everybody who's here joining us tonight. My name is Lisa Partida with Home Again LA, and tonight we have our second session of the month for the First Time Home Buyer Series presented by Operation Hope. So today we have our special guest, Rosa Amaya with, can you tell me which bank you're with again?
I'm with New American Funding.
New American Funding. And then we have Isabel Duran with Operation Hope. So tonight they're going to be going over loan purchase and agreements and touching a little bit on down payment assistance programs. So I'll go ahead and pass it along to Rosa and Isabel.
Thank you. So do you remember last class, I talked about creating a team to help you become successful in home buying? And one of the team members is the lender. And we have the best lender that I've seen for a long time. So I'm glad Rosa is available. Go ahead, Rosa.
You are going to make me blush.
Yeah, I could see that from here.
Not quite. All right, I'm turning on my camera now. Hi, everyone. Thank you.
There you go.
I got it almost all together.
Great.
It's a pleasure to be here and collaborate with Operation Hope and also with Lisa and Home Again LA. It's a great organization to be affiliated with. They do such great work with the community. And with my background with Operation Hope and my experience over 11 years now with direct lending with different banking institutions and the new company I've joined, which is New American Funding. I'm very happy to be here, but I learned it all at Operation Hope. So I'm very pleased to always collaborate and give to the community. That's very important for me to be able to provide that information to help you become a homeowner, guide you with credit, just budgeting. It's so important to be able to understand the process of becoming a homeowner. So very happy to be here with you guys. So Ms. Isabel, let me know when you have the screen ready and the material for us to start covering.
Ready for the next one? Okay.
We don't see the...
It's not, you're not sharing.
What? What happened here?
IT.
All right, let me...
I have a lot of energy. I've had like 2 cups of coffees, like a couple of candies. I had a tuna sandwich for lunch. And I had just a paleta. I love paletas, a strawberry ice cream. I haven't moved from here all day, you guys. I've been working away.
You've been working from home?
Do you see that now?
No, not yet.
No, not yet.
Uh-oh.
So it's been a tough day, but Rosa's got the sugar. I think I'm
Sugar
gonna be worse than last time, guys.
You're gonna be worse than who? I'm sorry?
The last time I did the presentation.
Oh, that's right. That was a good session though.
It was.
We all need the energy.
At the end of the day, yes.
Yes.
I'm glad I did have a couple of pieces of candy, the paleta.
Mm-hmm.
And I have a big fan next to me, which is just blowing my life.
Not sure. Can you see that?
No.
No?
No. Want me to just start talking about it? Go ahead. So while we have Isabel put up the presentation, we're going to go ahead and just start talking about the different payment assistance programs and how to have access to them. There's a lot of programs available, especially with today's market. We have seen so much resources come out, and we're very happy that California, the city, and other organizations have put together programs to be able to help first-time home buyers. We just had the run of the first set of funds from Dream for All, California Dream for All program, which provided up to 20% for down payment for you to purchase a house anywhere in California. They were very specific on areas, and they provided up to 5,700 applicants with a voucher to be able to purchase a home. So that was a very good program that was available. Everyone has received already their application voucher. They are out shopping, and there is about, I think, 800 individuals in the waiting list. I have about 3 on the waiting list, and I have a few that received the voucher. So that was a good opportunity that was available. Always look out to see what's out there that we can assist you with. Always ask your loan officer, whomever you're working with, the realtor, do you know of any down payment assistance programs are available that can assist me? And some of them may not require for you to pay back. There's a few grants that do not require payment. There are a lot of city programs and state programs that will require payback. Be aware of what they're providing you, but initially when you're buying a house, a down payment assistance program will help you with keeping your monthly payment affordable. As you change jobs, or as you get another career, or you get salary increases, your mortgage will be more affordable to you. So at that time, you could decide to refinance out of the program that you were in and be able to pay those funds back, or just continue to have that payment until after 30 years that you're going to pay that back. But the great thing about these down payment programs is that initially it'll help you as long as you meet the income guidelines, as long as you are looking to purchase within that area, they will go ahead and provide you with the assistance. And it's a lot of documentation. That's why I haven't left my desk today all day, putting packets together to submit to the city. We closed a file that had 5 layers of different programs. And when I say 5 layers, means that we had the first mortgage to provide. There was the city assistance, there was the county, there was the city assistance, there was a townhome fund, there was a grant, there was another grant. And at the end, we were able to also provide the borrower with a grant of $6,000. So total, the borrower was able to obtain up to $292,000 in assistance to purchase a home of $550,000. Her payment was under $2,100
Wow.
a month, including her property taxes, her home insurance, everything included. So she was very happy. So that's where we want you to know, even though prices we hear that they're high, there are programs available. Isabel, I received, I see it. Let me open the document and I'm going to share it. So that's where it's very important when we ask you for documentation to submit the packets to the city or any program, make sure that you provide us with the most current information. Some of these programs require 6 months of bank statements, 3 years tax returns, 3 months pay stubs, but it's very important to have those documents in all the pages, even the ones that are blank. We need those as well. So make sure that when we ask for the documents, provide them as soon as possible so that we can submit. There are sometimes that we have holidays in the middle, and that throws the files from the schedule, but we get to manage and get the files to the process. So it's very important for us to work together. You, your counselor, myself, your real estate agent, the underwriters, the processors, everyone who's in charge of touching your file and getting it to the next step. We have to make sure that we all work together and guide you in the process. So as Isabel mentioned, there are a lot of programs available. There's going to be a team of individuals working with you, and believe me, it's going to be a whole lot of individuals touching your file. If you're using down payment assistance, you may get a call, mainly from me, because I'm the point of contact for the whole file for all the programs. But you'll get a call. I need this for this file. I need this for that. And sometimes in the middle of the night, I'll be texting you, asking you for documentations. If I don't expect you to respond in the middle of the night, but I want you to send it as soon as you have those documents and acknowledging I received it. I'll get it to you as soon as I can. I understand you're at work and you won't be able to answer right away. I'm trying to put the slideshow up.
Can you get it?
Slideshow, yes. Slideshow. View. Normal. Slideshow. From current slide. Let's see. Trying to share. Can you guys see it?
Yes, we can.
Awesome. Okay. So we are going into loan approval, right?
Yes,
Isabel?
yes.
Right, okay. So I'm gonna talk so fast, our heads are gonna spin, you guys. Because I'm gonna go through all these slides really, really fast. Let's cover that. Yeah, we're here. So here,
There you go.
yes.
That's it. That's your start. That's your agenda.
So we're gonna talk about the loan application and the loan process, what to expect and what we're gonna cover through this process. We're gonna talk about what is a mortgage loan. We're gonna talk about steps getting you the steps involving obtaining a mortgage loan as well, the pre-approval process, how much is the lender willing to lend you, which is all based on your presentation of documents. How do you know if you're ready to buy a house? We want to make sure that you know that you're ready, because even though I can give you a pre-approval, it's really at the end of the day, are you comfortable with this payment? Are you ready to take the next step? And not just here's a number, go out and look for a house and you working with a realtor. It's the whole mental process and financial process of becoming a homeowner. How do we calculate qualifying for a loan? We'll talk about debt to income ratios in that section, your gross income versus your net income, what we use to qualify you for, and how do you increase your purchasing power if you're not happy or satisfied with the purchase amount that we're able to obtain at that moment when we do your first pre-approval. I love to run numbers for you first before we even submit the application, because I want you to be ready for the next step of, now I need all these documents, please submit. There's people sometimes they're not quite ready. I need to save a little more money, or I need to pay other debts. But at least you have an idea of where you're headed when we run those initial numbers. So the loan process, a quick overview of how everything's gonna happen. First, you're gonna do your research. You're gonna find out about the process of buying a house, who are the lenders, who are the players out there with down payment assistance programs or the best loan products. You may hear Bank of America has a product available that offers down payment or closing cost assistance. You may hear City National has a product available. You may hear First Citizens Bank or US Bank has a special product available at the moment, but they may not be approved with other programs at the time when you inquire. So they might just give you information on this is the product available that I have, and that's it, because that loan officer might not know of the other programs that are available. So with you working with Operation Hope and coming in through these workshops, you get to hear, hey, I didn't know about my bank, Chase, offering this program, but I also want to know about this down payment assistance? Are you an approved lender? So always ask, what can you give me to benefit my loan process? How can I come in with as little money as possible as I can? Because at the end of the day, it's about how can I save money? Yes, I may have $20,000 or $30,000 saved, but that's all I have to put into this transaction. How can you help me keep my money? Very important question to ask. And also, what's the process for the pre-approval? We're going to talk about all the documents you need to provide. There's differences between pre-approval, pre-qualification, and actual loan review and loan application to the underwriter. What documents need to be submitted. Once you open escrow, you're going to go into the loan processing process of it as well, or this step of loan processing. That's the next one. And once your loan is processed and we have verified all the documents that you have provided, and we have done all the reviews on the property, your income, your credit, and we have verifications, we can then submit that file to the underwriter for them to decide, okay, based on the documents that the borrower provided and the review that Rosa did, and the third person that looked at the documents and verified that Rosa did give us all the documents for the borrower. Now, the underwriter is the one that reviews whether it's beneficial to provide you that loan amount, or should they reduce it based on the debt to income ratios or the program guidelines. Maybe we missed a debt, and now that the underwriter has the file, they're like, no, you need to add this debt back in. The borrower had a student loan, and now we have to add that back in. So different positions may happen at the time of the underwriting process. So it's very important for us to have that individual. If that underwriter decides based on the guidelines of the program, we are now ready to issue a pre-approval or a conditional approval, meaning, okay, we're okay to provide this loan approval, but we need an additional pay stub, or we need to make sure that the borrower provides us verification of the funds that she's going to withdraw from their 401k, or they stated that they were going to pay an account. We want to see that document that the account has been paid, zero balance on whatever accounts you decided. So we can have either a clear approval, or a conditional approval with certain items that need to be clear. And then once that's all provided and clear, and if we're using down payment assistance programs as well, we have to provide that to the underwriter. Then the underwriter says we're clear to close. We're going to go ahead and send the loan documents out for the borrower to sign. Once you have signed, then we receive those documents back. And within the next day, we get funding. That next day after funding, usually in California, we don't do same day funding and closing. So the next day, you will get recording a notification that you can pick up your keys and you can go into your new home. We're homeowners, we're walking into the house. We now have to get ready to change the lights under our names, change the water, and make change of addresses. And now you're the new homeowner of this property that you fell in love with 45 days ago, or 30 days ago, or 60 days ago, with however long the process takes to get you there. We're going to be there with you. Myself, Isabel, your realtor, we're there to assist you throughout the whole process. So let me go to the next one. I mentioned at the beginning the difference between a pre-qualification and a pre-approval letter. A pre-qualification means you give me some numbers over the phone, or you're shopping around and you don't want your credit report ran yet, but you know what your credit score is, you know what the total debts are, you know your income, you know how much money you have for the down payment, and you just want someone to run quick numbers for you. I can create that really quick on a worksheet or with my phone, with my calculator, and say, based on the income that you're providing me, this is how much you qualify for. You haven't provided me a pay stub. You haven't provided me authorization to run your credit. It's just all verbal information that you're giving me. We can issue a pre-qualification based on that. But does your realtor want to go out with you with something that's not verified? Do they want to go out and show you properties? Not really. They want to make sure that you have done everything possible to confirm the amount that you qualify for. And that's why the pre-approval, it's like going out and looking for a house with cash, because we have verified your credit report. We have verified all of your debts, your income. You have given me your pay stubs, your W-2s, tax returns, bank statement to show that you do have your at least 1% of your own funds. Or if you tell me, Rosa, I have $200,000 I want to put down, and I want to also use the down payment assistance programs, you can. The program does allow you to use your own funds and use the assistance based on today's market. Every bit counts. So whether it's $10,000, $5,000, or a gift from family members of money under the mattress that you're going to go ahead and take out and use it. It can't be from the mattress, okay, guys? It does have to be in your bank account. That's just a joke. That's just a joke. No longer available mattress money or shoebox money, cactus money. It has to be sourced. Where is the money coming from? It has to be at least in your bank account. So if we verify all of that you have provided us documentation, then we can issue a pre-approval letter stating based on the documents that you provided, we have a pre-approval. And most of the times our files go through what's called a desktop underwriting. Our system has all the information, we run credit. And if we have an approval from that desktop underwriting, we're able to issue that pre-approval letter. If we have challenges, if we have a question, if something comes up, we'll go ahead and review the application again and see what changes we need to make in order to make the pre-approval happen for you. But it's all based on the documents that you provide. So do you rather go out shopping for a house with cash or just with the hopes that you qualify for this home? Definitely with cash, right? You know how much you are. You're not going to fall in love with a house that's out of your budget and then try and be discouraged that that's the house that I wanted and I only qualify for $500, but this house is $560. I'm $60,000 away from it. How do I do it? We want to make sure that you go out and have that goal already in mind. This is my number. And if I could push the numbers a little bit more, we'll see what we can do. But there's always a limit. And those are the debt to income ratios that we're going to talk in a few minutes. The 4 C's of lending. During the 4 C's of lending, you guys talked about the credit earlier. What we're going to review is your credit, your capacity, capital, and collateral. Those items mean how's your credit score? What are the total debts that you have? What are your monthly minimum payments? Do you have collections? Do you have accounts pending? Is everything paid on time? So it's not just the credit score. I have a credit right now, a client right now. Her credit score is 558. She's just 2 points away of being able to meet the city requirement. So she's like, Rosa, what do I do? I'm like, well, you have this collection, but if you pay it right now, it's going to trigger this. It might drop your credit score. So don't pay it yet, but pay this other account that's going to help your credit score improve. Then we're going to do a rapid rescore, and then we're going to see if the credit score has improved. Some programs may require a lower credit score, but if you're trying to use a down payment assistance program, they have their credit score requirement, which may be a 660 or higher. So we have to meet that requirement, even though I may say, yes, I could do a loan for 620, but if we're using this down payment assistance program, we have to meet their requirements. So we got to do everything we can to get there. So that is credit, not just, what did I do?
You went too fast.
Oh, Chica, that was really fast. Are you sure I touched it that much?
Or go backwards.
No.
I don't know.
I tapped it.
Can you stop it?
Hold on. Where's my mouse? Oh, I know. It might be my mouse somewhere back here. No. I dropped my mouse, you guys. El ratón didn't drop my mouse.
What happened?
El ratón. My mouse.
Oh,
Your mouse.
Yes, it was my mouse. Look, he fell overboard.
oh no.
Yes, pobrecito.
He's safe
let's
now.
see. Oh, Isabel.
Keep going. Keep going.
Yeah, I pressed it against the edge of my desk. And he fell overboard and he was running away.
Le crecieron las patas.
Así. Okay, so let me go from here. Understanding credit.
You just passed the four credit.
It's here.
Go up. Go up. There you
Here.
go.
Okay.
There you go.
Current slide. Yeah. Okay.
There you go.
Okay, Mouse, stay still. No more running away. Capacity, it means your ability to be able to pay this mortgage, this projected mortgage based on your current income. And also, we don't want to see just how much you make right now because you could have received a big salary increase, but we want to see the stability, how long you have been with this employment or in the same industry. Sometimes we change jobs because another company is going to give us a higher salary. That's great, but we want to see stability. If there's more than 6 months of gap, that's something that we always question. What happened? Why is it? Did you go back to school? Were you ill? Are you going back to the same company? Or were you hired, then put on leave, and then you're going back to the same company that they let you go? Whatever the explanations are, it has to make sense. Not just, oh, I decided not to work for some time and took a break, and now I'm trying to find in a different field or completely different company. So very important to know. Also, within your capacity to pay, how much money do you owe on credit cards? Not just are you going to be responsible now for the credit card and the current debt that you have, but this new projected mortgage payment, we want to make sure that you are able to pay that house as well, not just the first month or the first 6 months. It's a 30-year commitment, guys. So we want to make sure that you feel comfortable with that payment. Capital, we want to know how much money you have for down payment. You may hear out there 0% down or we'll pay all of your closing costs, but you always have to have at least 1% of your own funds or 3% of your own funds to purchase this house, because that's going to be your initial deposit into the transaction. Some companies, some listing agents or some sellers want to see some skin in the game. So your initial deposit has to come out of your own pocket. That's why it's so important to have savings, not cash from the mattress. It has to be in your savings account, checking account. You need to show proof that you have those funds. That capital is going to take care of your down payment that you need to bring in, the cost for obtaining this loan, so loan fees, the closing costs, the transaction fees that you're going to have. You have to pay part of escrow. You have to pay taxes. You have to pay the title change as well. Each seller and buyer pay their own fees, so you have to have money for that. Some banks may require for you to have 1, 2, or 3 months reserves. Now, one of the down payment assistance program has added that you need to have at least 1% of your own funds as reserves once you close the transaction. So you can't be out of, this is all the money I have and I don't have any more. There has to be a little bit more. So if we know that your monthly payment is going to be $2,300, you have to have at least that or double the amount in your account to show that you will be able to pay your mortgage. Why do they want to see that? Is because we can get sick, we might be short on a pay stub and you have money available from a checking or savings account. You also are going to need capital or funds for moving expenses. Remember, when you're moving from a rental to a new home, you may need to put a deposit for your utility bills. You may need to rent a truck to move all your cachivaches, all your items from your home or your furniture and things that you have. So want to make sure that you have funds, or if you have a friend that has a truck and they are able to help you, then that'll be a little bit less expensive, but you still need to feed them, have some drinks for them, have some food to give them strength to pull everything right. So you're still going to have a little expense there. Collateral. The collateral is the value of the home. Is the value of the home actually worth what they're selling it for? So we want to make sure that you get the we do the evaluation, the appraise of the property, and the condition of the home is actually worth what they're selling it. I just had a transaction where the property value came back down $10,000 and the seller was willing to negotiate and drop the sales price to the new value. So very important negotiation tactics that your realtor has to have, and being honest and providing all the information as quickly as possible. So what determines your qualification will be your credit score. Yes, the better the credit score, the better the interest rate, guys. I know there was a time where no matter if you had a 620 or you had an 850 credit score, you were going to get the same rate because rates were low. Now it actually impacts. So it's very important to have a higher credit score. I know I mentioned everything impacts your pre-approval, but for the interest rate, the better the credit score, the better the interest rate you would have. Loan to value is the amount of value that the amount of the loan that you're going to obtain compared to the value of the house. So how much money you need to borrow against the value of the home. Income, how much income you have is very important. We talked about that earlier, how much stable income you have. Debt ratios, this is a very big one. The higher the debt, the less money you're going to have available to go towards the mortgage payment. So it's very important for us to keep the debt as low as possible so that you can qualify for a little bit more. And at the time of the transaction, you could always pay down items on your credit so that you have more income available. The employment history, I mentioned about having enough, having history of employment, having job stability, very important to have that. I mentioned the debt to income ratio. This is the one that really hits a lot of people. They may have years of employment, they may have good income, but they have a lot of debt. They have a lot of credit cards, balances, and the monthly minimum payments are high. One thing that I was seeing a lot was the card payments. And I know we all need transportation, but we need to get the minimum. If we really need a car, you got to really review what's the minimum payment that I can have. If your goal is to buy a house, wait until you buy the house before you get that car. It'll help you. Actually, your credit score is going to improve. You're going to have another debt that's going to show good payment history, and you may get a better rate for your car payment. So very important. Do not buy a car in the middle of the process. Please, I've seen a lot of payments of $1,000 car payments, 800 car payments. That's a lot of debt. Plus the total minimum payment that you have on your credit cards, student loans, all of that adds up and it eats into the amount of money that you have available for your mortgage. So very important to avoid having debt. If you can pay down, pay down. Most programs allow you to have up to 45% of debt against your income. So how we calculate that is your gross income, right, divided by 45%. That's the maximum monthly debts that you can have. Sometimes the programs will allow you to go up to 55%. That's the FHA programs. The conventional programs will allow you to go up to 50%. Some of the down payment assistance programs do not want you to go over 50% because remember, we're doing this pre-approval based on your gross income. So please raise your hand if you take gross home. Oh, Rosa, put your hand down. Don't be silly. You get taxes. We all get taxes. We all get medical insurance deducted. So we don't take gross. So I'm doing your pre-approval based on gross. And we have to consider my net is less. So am I going to be comfortable paying this mortgage with my net income? Not everyone covers that, but you need to be aware of that. Like I said, when I left Operation Hope and I joined the banking world, I did not take my nonprofit hat away. I kept it because I want to be able to sleep at night and I want you to have a house for 30 years. Okie dokie. All right, determining qualifications, the employment and the income history. We talked about that very briefly earlier. We need at least 2 years of in the same field if possible. And if you're changing jobs, let's say you were going to school, you were in one field and now you graduated, now you're going to something else. We're gonna use that certification, your graduate degree as verification of income to showcase they were going to school for that field. So now they're getting a better job, they're getting a better income. So that's okay. We can go ahead and put that in there. Most programs require proof of income such as pay stubs and tax returns. If you are self-employed, it's okay. Don't worry about that. We can show your tax return for the last 2 years or 3 and profit and loss statements for the year to date. So we're in July already. The month that ended was June. So the city, in order to verify, or us to verify your income, we're gonna wanna see the last 2 years taxes, but also what has your income been for the past 6 months? So from January to date, what has been the total income? So if you have a document showing that your total gross was $60,000, but you had deductions and expenses of $35,000, you have $25,000 left to help to say that's my income that was paid to me. So that's okay, we'll show that. And as long as it shows consistency, but if it's showing that 2023, your income was down, in 2024, you're trying to show that it's higher, we have to take the average or the lowest of the two. So it's very important. And I tell my self-employed people, I know you do not want to pay taxes. I know your tax consultant is telling you in order for you to not pay too much taxes, put all these deductions. If your goal is to buy a house, do not put deductions. Put as minimum as possible so that you can qualify for this mortgage. That way you're able to qualify the most. All right, I did not say do not. I did say that, right? Do not put deductions. I meant put minimum amounts. It's hard work for self-employed individuals. I've been there in the past, so I know. And my parents have always been self-employed too, so I understand. I understand. All right. Loan to value ratios. It's very important based on the lender, what programs they have available. They may say we need you to put 20% down or 3.5% down. So depending on the loan program that you're using, the bank may say we need you to put 20% down, which means they're going to finance 80%. So that's your LTV, the percentage of the loan amount compared to the purchase price. If, for the example here, if we're buying a house for 110,000, for 100,000 and the value is 110, the loan amount, you're putting 20% down. So you're going to put $20,000. So if we do the division of 80,000, which is the loan amount, divided by the purchase price, or LTV, or loan to value, would be 80%. So this calculation is done with every loan. The less money you put down, the higher the LTV will be. Most banks require to see that you put some money down. There are some programs that allow at least 1%, such as the down payment assistance programs. But really, when we add all the numbers together, you're putting more than 1% because that assistance that you're receiving adds up to these numbers and it helps you. So you will always meet the minimum requirement or even 20% down. Remember, I started talking about the Dream for All program. That one provided 20% of the purchase price. So that was a good program, and it avoids mortgage insurance. Yes, what is mortgage insurance? A payment that's not needed, but it's required by the banks if you do not put 20% down. We don't need it, but it's required. It protects them, the lenders, in case if you default. It protects us, the consumers too, if we lose our jobs or if we get sick and we're not able to pay your mortgages because we had other bills. You could call your insurance, your mortgage insurance, and have them paid the months that you're behind, and they will put those months on the back of the loan. So when year 30 comes, you still have 2-3 more months to pay because they added that. So it is kind of a protection in the long run, but it's like having car insurance, but you never get into an accident. You're just paying it because, right? Okay, credit scores qualification. Some loan programs will require a minimum of 580 credit scores. FHA is one of those loan programs that goes as low as 580. The maximum credit score is 850. I mentioned that most programs will require at least 660 credit score. And again, the higher your credit score, the better the what? The interest rate, right? So it's very important to keep that in mind. How much mortgage can you afford? It's very important for you to know. I mentioned earlier DTI, I mentioned the percentages. We'll talk right now about the gross monthly income. Remember, the number that none of us take home is, but that's the number that we're going to use to calculate your mortgage payment based on how much you qualify, based to see how much you qualify for. So if I make $60,000 a year, right, and I divide that by 12, I'm going to get like $5,500 and something a month. Is that right? Did I forget that number? I haven't done this example in a minute. Let's see. I make $60,000 a year. Divided by 12, that's $5,000 a month. And I'm allowed to use 45% of that to cover my mortgage payment. So of $5,000, if I use 45%, the maximum monthly payment that I can have for a house mortgage, a house payment is $2,250. So that $2,250 cannot have more debt than that, and it has to cover my principal, interest, taxes, and insurance payments. So all of that has to be included. But what about if I have an HOA because I'm buying a condo? So now I can afford that. So I need to have a program that can help me qualify for higher. If I have other debts, that's also it's going to put me there. What did I do? I did it again, guys. No te digo.
Okay, your mouse has to stop this. Or you can do that.
Let's see. Okay, here I learned. Oh, hallelujah. I was here. I think I'm gonna stop using this mouse. Let me take the battery off. It might be the battery. Okay, I'll just use that. Yeah. All right. So if I have additional debts, if I have student loan payments, and I have also a car payment, my payment for a mortgage is going to be less because I have that additional debt. Remember, my maximum amount is 45% of what I use from my income to pay my debts. So if I have more debts, that number is going to drop. If the program allows 50%, we're okay. But if we're over that 50, we have to lower the purchase amount. How do you choose the lender? Referral. You're in great hands here with Operation Hope and with Home Again as well. They talk to all of us and hear about our programs, what experience we have. You can have your financing institution provide you a referral internally. Always ask the question, what can you do for me? What programs you have available? Lenders versus brokers. Lenders is us that provide the funds directly to you. So a direct lender, a broker is a company that will search for a loan for you and see what programs are out there and have an additional fee on there. You could also go to the HUD website to be able to get some referrals for you to get your financing done. What documents do we need in order to present our application for purchase? We need pay stubs for the three most recent ones. We need your social security card. We need to verify that you have a social. If you have, I'm sorry, we're gonna need, yes, your social security card and your picture ID. We need to verify, even a lot of the times I don't meet clients. I just closed a few transactions. I never met the client in person, just through Zoom and their pictures. And one of them never wanted to have an open window, open camera. So it was all about send me your identification. Then finally he said, oh, here's my picture, Rosa. Just want to let you know that I'm very happy with the transaction. Gave me a nice reference letter. And I'm like, okay, the picture does match the face on there. So very important for us to verify that it is you. If you receive any disability or social security, we need to see the award letters as well. Down payment, if you have money in the account, we want to see your bank statements. If you're getting gift funds, we need to see a gift letter from that individual and their bank statement. Tax returns for the last 2 years, that's what we require, but some of the down payment programs will require 3 years. W-2 is the same thing, 2 years for us, 3 years for the programs. Bank statements, we need 2 to 3 most recent bank statements. If you have a bank account that gives you every quarter or every 2 months a bank statement, we need to see at least 4 of them. If you have a 401k, if you have any retirement accounts, we want to see the last quarterly or the last 6 months as well. Very important to verify where the money is coming from. Since 9/11, everything needs to be sourced. Your down payment, that money that you're going to use, we need to see that it's coming either from a savings account, retirement account. If you're getting gift letter, again, we want to see gift funds. We need to see a gift letter. If we're using down payment assistance, we need to get an approval. So us as loan officers who work with the down payment programs, we have to see and submit the application to obtain those approvals. So very important to get that done. The seller may decide to give you a closing cost credit or some type of assistance towards your purchase. We can also use part of their credit to go towards your down payment. But again, most programs still require your 1% of your own funds. What is a mortgage? A mortgage is the loan that you're going to obtain from the bank in order to purchase this transaction, unless you won the lottery yesterday. Did any of you buy the ticket? I don't think anybody won it. I bought a ticket. I haven't checked it yet. Maybe I have a couple of millions there saved for me. So I'm going to check today later on. Okay. If I don't answer tomorrow, Isabel, or it's because I want the lotto. Okay. All right.
Okay.
I'm telling you.
I won't tell anybody.
If I don't answer, I want something. Okay. All right. Okay. I'm gonna buy 2 houses, and I'm gonna raffle one off. Okay. So be ready. I'll let you know for that. That is my goal, you guys. If I win the lottery, I'm gonna give some back. Mortgages are structured by such factors as length, established payment periods, and interest rates. So the money that you're borrowing, you have to pay it back with interest over a period of time, 30 years, 40 years. And of course, nothing's free unless you win no, it's not free. You have to pay taxes. Oh my goodness. That would be a big headache. All right. Interest rates. I would say you're going to pay that interest to the bank to borrow, just like using a credit card. It's just a larger amount that you're gonna owe. People say, I own a home. No, you own a debt for 30 years that you're responsible for. Not trying to discourage you, just trying to make it real. We owe debt. What is going to be part of your mortgage payment? You're gonna be paying principal, interest, tax, and insurance. Principal is the money that you're paying back, right? The house is worth $500,000. You receive some assistance, and the loan amount was for 380. You're paying that money back plus interest. So double the amount of what you borrow. I won't say triple. I don't want to scare you guys, but it is up there in doubling numbers. Taxes paid to the government. That one, even if you pay your mortgage off, you can still pay taxes. So it's kind of like, should I pay my house? I'm still gonna have to pay these taxes. Even if I win the lottery, I don't think I would pay it off. I don't know. I might just sneak away. Insurance, you always have to have insurance for your home, okay? In case of a fire, in case of someone falling, anything that happens to your home, you have to have protection to have your home replaced or covered. I had someone tell me that they were bitten on the leg and they had an $800 bill from the medical, and they went ahead and made the claim because it happened at their friend's house. So that bill had to get paid and the insurance covers. So it does protect you, especially if you have a pool. You want to have home insurance, very important. People get hurt all the time, but not sunburn. That does not count, okay? Fixed rate mortgages. There are different types of mortgages available. There's fixed rates. That's for us, the consumers, very important for us to have a rate that's going to be fixed for the 30 years that you don't have to worry about. It's going to change. What is my payment going to be in 6 months, in a year? Very important to keep that. Adjustable rate mortgages are for investors and maybe someone that knows they're going to win the lottery. Not me, I'm not sure yet, but I still wouldn't take that. Interest only mortgages, those are still available, but again, those are a lot for the investors, for individuals that know they have a plan. They're going to go ahead and sell the house in a few months or in a year, and they're going to get their money back, sell the property. They're going to do a couple of other things. So mostly for investors. And option adjustable rate mortgages, those are still available, but again, those are the ones that got a lot of people in trouble back in 2008. We don't want to be those. Then we're going to help you get a fixed rate that you're going to be happy with. There are different types of loans available. There are government loans, FHA. Again, we mentioned them earlier. They're the government guarantee loans. The Federal Housing Administration, they provide the lower interest, the lower down payment, the lower credit scores, and they have different programs available, 203Bs, which include construction or property improvement as well under the 203K, and the energy efficient mortgage loan programs, which means you're going to make your home more efficient. Okay, chicas, I promise you I didn't touch this.
So can we stop here?
Yeah,
Okay,
we're good.
all right.
Well, thank
So
you for a great entertaining session. I appreciate it so much, you guys.
We have to make it alive because it's the end of the day.
Yeah,
I had lots of sugar today too, so
you're very
program.
sensitive. No, but it was good. I enjoyed the part where you were talking about the debt to income ratio because I still have yet to understand it, and I figured it out today. So I appreciate you going into detail on that.
Details.
Really,
I like to cover that one a lot because a lot of people, again, well, I can pay $2,500 rent, or I'm paying $2,700 in rent right now. Yes, but you don't have property taxes. You don't have all the other bills included. So you have to be aware of, maybe you can afford it right now, but when we're looking at the new numbers, it's going to be a little bit higher. But the pay stubs is what really tells us whether you can afford it or not.
okay.
Yep.
All right. Well, thank you so much, girls. I appreciate it. And then I guess we'll see you next week, Isabel.
Next week on real
Tuesday.
estate, right?
Yeah, real estate is next week.
Tuesday, real estate.
Mhm.
Okay, you got it.
All right. Thank you so
Yoo-hoo.
much. Have a wonderful evening, ladies.
Thank you.
All right,
All
bye.
right. Can you send
Thank you, Noemi.
me your video?
Yeah.
Okay,
Yeah,
I want to
just
show it to
check
my
out
boss. She's gonna say loca.
All right, no problem. Okay.
Alrighty.
Bye.
Thank you. All right,
You're welcome.
Isabel.
Bye.
Bye, ladies. Have a great night.
You